After the recent banking crisis involving Silvergate, Silicon Valley Bank, and Signature Bank, the market tanked. The Dow fell 4.44% to post its worst weekly performance since June of 2022. The S&P dropped 4.55%, while the Nasdaq lost 4.71%. Meanwhile, gold inched closer to that number of 2,000. This is not surprising. The market is highly dependent on the confidence of investors, and with 3 bank runs, investors are finding it hard to be optimistic, sending everyone into a panic, and many are choosing to liquidate even though inflation is still elevated, guaranteeing them losses. There's one group that's not scared of inflation, and that's gold investors. We have thousands in our camp. Some of them called up during the banking crisis happened, and they just wanted to thank us and buy some more gold. We took that opportunity to understand a little more on why they repeatedly invest with Noble Gold Investments. Many of them share the same investing principles as billionaires. And here's some of them. In recent months, some of these elite investors and even central banks have turned to precious metals like gold as part of their overall investment strategies. These strategies allow them to preserve and build their wealth across multiple different investments and also during many different generations. Lord Jacob Rothschild, David Einhorn, Ray Dalio, Stanley Druckenmiller, and many other billionaires invest in gold for these reasons. They want to preserve wealth. Unlike paper currency, coins, or other assets, gold has maintained its value throughout the ages. People see gold as a way to pass on and preserve their wealth from one generation to the next. Since ancient times, people have valued the unique properties of precious metals, and they use it as a store of value. A store of value is an asset, currency, or commodity that can be stored and retrieved at a later date without losing its value. What about a hedge against inflation? Gold has historically been an excellent hedge against inflation because its price tends to rise with the cost of living increases. Over the past 50 years, investors have seen gold prices soar and the stock market plunge during high inflation periods, and diversify their portfolio. Investors want to protect in tough times. Historically, this is when gold shines, moving higher when equities and other riskier assets are under pressure. Unusually, though, gold can also move higher when these assets are in positive territory. The ability to perform in good times and bad is based on gold's varied demand, making it a uniquely efficient asset for any investment portfolio. How do you capitalize on future upside? Much of the supply in the gold market since the 1990s has come from sales of gold bullion from the vaults of global central banks. But recent years have witnessed different industries increase their demand for gold. Cell phones, computers, data servers, and the medical industry all use gold. Recent declines in production suggest a potential for renewed pressure on global gold supplies. It can take 5 to 10 years for a new mine to start production, and as a general rule, a reduction in the supply of gold increases gold prices. So take it from the billionaires, hedge with gold. It's time. That's these 3 bank runs, the crypto's crashing, and the market tanking. Take a look at a hedge like gold now.